Thanks, guys. I noticed these presentations are hard to see, so I do have some presentations that I've put up at the front there if you want to get a copy. I find squinting at tables and charts can hurt your eyes, so there are presentations there at the front. As said, we are in South Africa, and those of you that know the platinum business will know that if you're not in South Africa, you can't be in the platinum mining business. It's where all the world's primary production is located. We are the only New York listed company here during the conference, so we've certainly evolved as a company over the last 12 years, and we've finally put our first project into production actually just in the last couple of weeks. We are, as many of the companies today, we're headquartered in Vancouver. We have a very, very small corporate office there, and most of our operation is actually in South Africa now, Johannesburg, with a corporate office. We have two projects, the Western Bushveld joint venture, which we acquired over 10 years ago, and we've now financed and built, and is now in production. And since then, we've also made a major discovery in another part of South Africa, which is now verging on 40 million ounces, which there was a time when you said 40 million ounces and people actually were quite impressed in the mining business. Unfortunately, we're not being credited for those ounces or the production, frankly. And we have the Japanese government as a partner on our second asset as well. Many of you have seen this map before if you've ever studied the platinum industry. It is a very, very small business. I can count on two hands the number of companies that are mining platinum today, and many of them are actually in a very distressed situation. You've probably read about the Lonmin recent rights offering that got a lot of publicity in London, where they're listed, and also in South Africa. Lonmin is a company that was verging on bankruptcy. They produce 1 million ounces a year of PGMs, and they lose money on every single ounce that they mine. They also employ 50,000 people in South Africa, which makes them a very, very large liability for the government and for the number of employees that are there. So that is a very difficult situation that's being managed by their shareholders. Lonmin used to be, I think, a $6 billion market cap, is now 50 million in market cap. So it's pretty shocking the destruction that we've seen in this particular part of the mining business. Our first project is, as you can see there on the left, the Western Bushveld joint venture. This is a conventional platinum mine. For those of you that don't know, it's a 1 meter reef horizon, and it's mined using basically a lot of labor. The advantage that we have at this asset is we're very shallow. We're about 100 meters from surface in terms of the initial mining, and we're twice the grade of most of our peers in South Africa. So that's why we've decided to build a mine, produce, and we will have a margin at these metal prices. On the top of the page, the Waterberg project. This is a very new area for platinum mining. The most profitable platinum mine for all of Anglo Platinum, and frankly, probably all of Anglo American, is the Mogalakwena pit, which is there in the middle of the North Limb. It's the only open pit platinum mine in the world, and Ivanhoe is building their Platreef project just to the south of that project. And we've made the Waterberg discovery to the north. So these are different assets. These are very, very thick, 40, 50, 60 meters in thickness. They're mined using mechanized, very modern mining methods, and very, very low labor component. So, and most people expect the mining to shift away from the Western Bushveld to the North Limb over time as these assets become depleted and continue to be very high cost. As a company, obviously we've suffered along with the rest of the sector. The market cap now is just around $200 million, certainly down from over $1 billion a couple of years ago. We've been able to finance the construction of our first mine because of the shareholders that you see on this page. They're about 80% of the issued and outstanding. Liberty is the largest shareholder. I think we've seen a couple of other companies present today and have spoken about Liberty. They've made the decision to invest in the space. They have a long-term view on the commodity price, and they own about 20% of our company today. So it's been good to have them as a shareholder. We control a very large inventory of minerals, 3.4 million ounces in reserves from the first mine, and then we have tens of millions of ounces of inferred and measured resources. It's interesting, we have a nice mix of both platinum and palladium, depending on which metal you think is more prospective, and there's certainly an argument ongoing about which of these PGMs has better prospects. The prices for platinum and palladium, obviously, we're now down in platinum to 7-8 year lows in the price of platinum, and there's a number of factors that have contributed to this drop. Obviously, the U.S. dollar strength, questions about China, and most recently we saw the Volkswagen scandal really did affect the platinum price, where a lot of the autocatalysis in diesel is done using platinum catalytic converters. For gasoline, it's a palladium technology, and palladium's actually held up quite well during the last year or two in terms of pricing. Demand for these commodities, it's all about cars and general industry. For platinum, it's obviously diesel technology for pollution control in automobiles, large jewelry demand, particularly in China, and in palladium, it's all about gasoline engines. The demand has been very, very consistent, as you can see from these tables. 8 million ounces a year for platinum, well over almost 10 million ounces a year for palladium. So we certainly haven't seen a drop-off in demand that would dictate this kind of U.S. dollar weakness in both of these metals. On supply, as you can see in the top graph, South Africa is really the driving force behind platinum supply. Interestingly, last year, South Africa went from over 4 million ounces a year almost down to 3 million ounces, and that was a result of the extended strike that we saw in the platinum industry. Most of the mines were shut down for 6 months, and that did affect the price. We saw a very strong price during the strike, and that price has come down significantly since last year and the end of the strike. The Russians really control the palladium market. The Norilsk deposit in Siberia is a nickel mine, but it is a large palladium credit, which makes them the biggest producer of palladium in the world. So interesting that both of these commodities are concentrated in two jurisdictions that, frankly, a lot of investors don't go to, both South Africa and Russia. And we've all seen different charts on what these cost curves and supply curves look like. Platinum is very easy to analyze because all of the production is in one small part of the world, and the current rand-based price for the basket of metals that we mine in South Africa, and all of us in South Africa are mining a similar profile of metals. We're now through the 50th percentile of the cost curve, so half of the mines currently operating in South Africa mining platinum are losing money. So not a situation that we expect to continue for very long if the metal price stays where it is. So off to the first project, WBJV Project 1, as we call it. This project was acquired post-apartheid when the mining rules changed and we were able to go to South Africa and acquire some of these assets. We've been building it now for 5 years. You can see from the photograph there, it was an empty field 5 years ago, and now it's a fully functioning, completed $500 million mine. We have an 83% interest in this project. We have a full mining license, and we will deliver our concentrate to Anglo American Platinum just down the road from our mine, and they will pay us in US dollars. And we expect to make that first delivery in January. So as of 30 days from now, we will be a revenue-generating, producing platinum company, and we'll join the exclusive club of maybe 6 or 7 companies globally that actually mine platinum as a primary product. This project has obviously a profile that's strong in platinum, as most of the Western Limb is. 4 million ounces in reserves, 6 million ounces in measured and indicated. We updated all of the technical reports for this project over the summer, So anyone who's interested in digging into details on the mining methods and economics, it's certainly available on CDAR, which is the Canadian reporting system. So this actually is a bit of an older slide now. We're actually complete. The project is 100% complete. It's gone into what's called hot commissioning. We've drawn down $80 million in operating debt facilities. So once the mine was commissioned, we were able to draw down $40 million from Sprott Lending and another $40 million from Liberty Metals, our biggest shareholder. And so we're in production today. We're mining in several different mining blocks. We have a large stockpile that we've built up over the last few months. We have all the power, all the water, all of the infrastructure is complete. So this is a mine that is now in its ramp up phase over the next 18 months. A lot of people, were uncertain about how we could finance this project over the last 12, 24 months, and it certainly was not an easy task to finance a new platinum mine in South Africa during this last cycle. All of the construction capital was done through equity, so we did multiple equity offerings over the last 3 or 4 years, and those were supported by the major shareholders that you saw on that previous page. As part of the the operating capital required for the initial production phase, we were able to put in place $80 million of operating debt through Sprott and Liberty, as I mentioned earlier. We have about $30 million in cash, and we expect this mine to be revenue neutral in July, August of next year. So it will be a self-sustaining asset by late next year, even at current platinum prices. And at that point, we'll be in a position to build cash from earnings from production. And again, why did we choose to complete the project given the current market? It's all about the cost. So this will be one of the lowest cost conventional platinum mines in South Africa at a cost below $700 an ounce. Certainly, because we are a New York listed company, we use 3-year trailing prices to value these assets. And we all wish that these prices were still there today. So over the last 3 years, platinum and palladium have averaged about $1,200 based on our basket of metals we mine. The basket today on a spot basis is closer to $800. So margins are tight, obviously. And again, if this project doesn't make a margin, there aren't very many in the South African platinum space that can actually succeed. In terms of production, we have a 2-year ramp up, and by 2018, we'll be producing 250,000 ounces of platinum and palladium annually for well over 20 years. Again, very quick view of the South African cost curve. At current US dollar prices, about 40% of the mines are losing money, about 30% are marginal, and there's maybe 1 or 2 that have what we would call a very strong margin in terms of operating. So we expect to be in that lower end. Interestingly, the bar on the left-hand side is the Anglo open pit on the north limb, and that's right where the Waterberg asset that we've discovered is positioned. So we would expect in 5 to 7 years, as we develop Waterberg and put that project into production, we would join Anglo American in terms of having one of the lowest cost platinum mines, but also a new bulk mechanized asset as opposed to the conventional mine we've just built. I won't go through a lot of these slides. This just shows you the production profile. So we're obviously in the early stages of ramping up. There's a good 10, 12 years of high-grade mining, and then you switch over to the secondary UG2 mining horizon. And on a cash flow basis, the really critical point is mid to late next year, where you basically break through that peak funding period, and the need for any external capital basically goes away, and you're a self-sustaining sort of positive cash flow generating business. Again, this is a diagram of some of the mining areas. So one of the benefits we have, even though this is a conventional mine, there are thicker blocks here that we can use mechanized methods to mine at. And so we've redesigned this asset over the last year to take advantage of some of those deeper areas in terms of thickness. Just a few photographs. This is what $500 million gets you for a platinum mine. Very, very standard mining process. It's a flotation circuit with a concentrator and a filter press. We will produce a concentrate product, which will then go to the smelters owned by Anglo American. There's a primary crusher. Again, the advantage here is that because it's a shallow asset, we can just use conveyors to move the ore from underground into the crushing and milling areas. So no need for deep vertical shafts and expensive hoisting. And if you look at Anglo American, Impala, and Lonmin, that's really what they're faced with today. They're dealing with mines that are averaging 1 kilometer to 2 kilometers deep. They're mining 3-gram material, and you know, the economics of that type of mining at $800 platinum is very, very challenging. So this will be the last of the true conventional Merensky assets in South Africa to be built. And that's the last photograph there of the milling and concentrating infrastructure. So that's the first project. That's about 12 years of work in South Africa from Canada. It's obviously been a challenging period, but we've been able to complete it and succeed. While that's been happening, we've always been on the lookout for new, different type of discoveries for platinum in South Africa and in Canada, actually. And Waterberg is an asset that really has the potential to change the way that platinum is mined in South Africa. So again, photograph or an image of the North Limb. Again, the Anglo American pit. Mahalaquena, the lowest cost platinum asset in the world. Robert Friedland and his company Ivanhoe is developing the Platreef project. Very similar dynamic, very thick. Platreef is quite deep at 1 kilometer underground, but it has very good economics as a 40 to 50 meter thick mining horizon. The Waterberg asset was discovered through basic science and staking.
Excuse me to interrupt,
yeah.
But that could complement well, you know, buying his stock is the stock from Ivanhoe. It's of course not a pure play on palladium and platinum because, and then also you have some Congo and copper in there, but the price is so low, it's pretty tempting also. So it could be a nice combination to have both shares, I would say.
Yeah, I would never claim to try and represent or promote Robert Friedland. So you know, if he's listening, my apologies. But you know, it's interesting that 2 Canadian companies have shown up in South Africa to make world-class discoveries, and you know, I think it says a lot about the cultural difference between a Canadian exploration company and some of the more conventional legacy South African platinum producers who really haven't spent the time or the energy to really explore in South Africa. And these deposits have been really sitting under their nose for almost a century. So, and it's also interesting that both Friedland and ourselves have the Japanese government as partners. We have the state company for exploration, Jogmec, as a 28% partner. Ivanhoe has Jogmec and Itochu Corporation as a 10% owner in their asset. And it's interesting because if you look at the car industry, and that's really what's driving these investments is the car industry. The Japanese have made a decision that they will fund and develop the fuel cell industry as opposed to the plug-in electric technology that a Tesla or some other car makers are really pushing. And their view is that plug-in electric is unsustainable over the long term, and fuel cell is really the future of the car industry. And you can't build a fuel cell without platinum. It's not a pollution control situation. It's a catalyst that essentially converts hydrogen into electricity, which drives the fuel cell system. And so there's somewhere between 5 and 6 times more platinum in a fuel cell than there is in a conventional automobile. And that's why the Japanese are in South Africa for the first time making direct investments in platinum mines as opposed to passively just purchasing production from existing companies. Here's the structure for ownership. Japan is funding the next $20 million of work on this asset, and in 2017 we'll make a decision on whether we build it, how we build it, and what that process will look like. The first PEA we published on this project called for $1 billion capital cost with about 600,000 ounces of annual production. with a cost of approximately $300 an ounce. So this is, and Ivanhoe's project is quite similar in terms of cost and production profile. As was said earlier, this is really a palladium mine. Well over 50% of the ounces in Waterberg are palladium, and there's also a very interesting gold credit, which is unique for South Africa. The difference, as I said earlier, it's all about the thickness. You can see the picture here. There's a typical conventional platinum mine will have a 1 to 1.2 meter mining horizon. With putting workers in those kinds of working areas is very dangerous. It's very unproductive, and the difference you get in mining a 40-meter thick horizon is night and day, and that's why this asset is getting so much interest from not only the Japanese, but I think the major South African producers are also looking very closely at this asset. The project itself has a 13-kilometer strike length. It's 2 separate layers stacked on each other. You can see from the drill holes there, we've got over 300 pierce points into the deposit. So it's now in engineering. We're working on the pre-feasibility study. So this is not some type of early stage discovery. This is now through PEA and into pre-feasibility study. So this will be a mine over the next 3 to 5 years. The current focus is on drilling shallow. We think there could be an open pit opportunity at Waterberg, and that would really change the dynamics of how this project gets built, the funding and the timeline to be considered for construction. So that's really the focus of the PEA that's currently underway. And I talked about the mining method. So again, we've got conventional mining on the western limb, thousands of workers underground mining by hand essentially. We're all aware of the labor issues around mining in South Africa. Most of the platinum mines have about 60% of their cost is in labor. And anything you can do to remove that component is beneficial. So Waterberg will use strictly mechanized methods with, less than half of the labor that you would need in a conventional platinum mine. So again, this is again very interesting in terms of how labor is evolving in South Africa. The timeline for the project, we're in pre-feasibility. We'll file the mining application next year, and then we'll look at 2017 as a potential construction start for the project. So that's the presentation. Again, as was said earlier, at $150 million market cap with well over 50 million ounces in PGM inventory as a company, $500 million sunk into the first mine that will produce now and still have a margin at these metal prices, I think is a very interesting proposition. And we're one of the few mining companies that has actually been able to develop a new asset through this cycle. I can probably count 4 or 5 of them on one hand. And so when prices do turn, I think this company's positioned to do very, very well. So thank you for your time. Thank you.